Welcome to Realty Talk, the show that brings together the country's most authoritative and respected property experts. Follow us on all the socials and subscribe for updates and exclusive offers. Realty Talk is powered by realty.com.au, connecting buyers, sellers and agents differently.
Greetings and welcome to Realty Talk, your trusted voice for all things property. I'm Bushy Martin from Know How Property Finance, and we've got another very special feature show for you again this week. Current nightly news headlines continue to create the false impression that property markets are crashing everywhere. But proven property analysts know that when the stampeding herd are fearful, the few smart contrarians get greedy. Because it's never about when to buy property, it's always about where. So to inform you on what's really happening with property conditions and to reveal where the best property opportunities are around the nation moving forward, Pete Wargent joins us to unpack the results of Buyer's latest annual investor report. So if you're looking for all of the hot tips on what to buy where in order to stay ahead of the pack, keep watching to get all the answers. And before we get into it, make sure that you stay on top of all of the best property opportunities by jumping on channels.realty.com.au/Realty Talk and hit the subscribe now button so that you don't miss another episode and that you get every show in your inbox every week. And for making the effort, we'll give you a free copy of my award-winning book, Get Invested. We've got a treasure trove of property gold to share, so let's get on with the show.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
Greetings and welcome. Now, given the deluge of doom and gloom that's dominating mainstream media headlines on misleading stories claiming that rising interest rates are going to lead to a major property market crash, we thought it was timely to balance the fear fiction frenzy with some real facts. Because it's actually times like these when you actually swim against the tide of popular but uneducated opinion, the greatest opportunities actually arrive. You see, it's never a question of when you should be buying or investing in property, because if you can, the best time is always now. The real question needs to be where amongst the 10 million odd properties spread across more than 15,000 suburbs, captured in over 200 regions and about 8 capital cities, is the best property to suit your strategy and your capacity. So to help you unpack what's really happening in property across the nation and where the best opportunities will be over the next year, we're joined by Realty Talk favourite and renowned property investor and analyst, Pete Wargent, who's now actually spearheading the Buyers group, and they've just released their 2022-23 investor report that identifies the top suburb picks. So welcome back to the show, Pete.
Pleasure. Thanks, Bushy. Always great to be on.
Likewise, mate. Now, can you sort of kick things off by giving us a bit of an update on Buyers itself in terms of what it is, how you're different, what you actually do, and ultimately, how does this best position you to predict future property price movements and trends?
So we're a national marketplace or property marketplace for buyers agents. So we offer fully independent advice. So we've got no vested interest in where you should buy. We've got fully national coverage. We work with some of the best buyers agents in the business, every state and every territory, and we can cover all budgets and all briefs. So we also do property planning and strategy, and we come at it from a national perspective. So we don't focus on any particular state or any city. We cover the full gamut.
Yeah, no, it's certainly a unique platform in the space. And given you've got people on the ground as well as that sort of central overview, it really does give buyers an opportunity to get the best of both worlds. So that's awesome, mate. Well, look, to sort of start digging into it then at a macro and micro level, as I would call it, where are property prices heading around the country in the short to medium term? And most importantly, why as you read it?
Yeah, so as you mentioned, the property market overall is in a downturn. Far fewer transactions happening at the moment as compared to last year. A lot of consumers are worried about rising interest rates, and there have been some price declines, particularly in Sydney and to some extent Melbourne. And it's being driven especially by what they call the top quartile of the market, so the premium end of the market. I think elsewhere price growth has been slowing and in some cases falling. I think it's worth remembering, though, that in 2021, capital city prices were up 24%. So a slowdown is not unusual in that context. And I think at the moment, there's just a lot of caution around because a lot of borrowers have never seen an interest rate hike before, particularly the younger ones. And there's probably the prospect of more interest rate hikes to come over the rest of this year. So that's driving some price declines, and especially at the top end of the market.
Yeah, and that's an important distinction because the on medium values sort of can paint a little bit of a misleading picture when there's actually opportunities amongst different price packets in different locations that might sort of give a slightly different picture. But tell me, Pete, how are the supply and demand drivers looking in the foreseeable future, and what impacts is this going to have geographically, do you think?
Well, on the demand side, we've been through a very unusual couple of years. I think unprecedented is an overused term, but it kind of is really. We've had border closures. We effectively had no immigration for a couple of years. And in fact, we lost an awful lot of temporary visa holders. About 500,000 of them disappeared over the COVID period. Looking forward, though, population growth is going to go from a very low level, effectively just the natural growth in the population. Now we've got the borders reopening. There's a huge backlog of visa applications, about 900,000, and over 500,000 of those are people outside Australia. So you can expect to see population growth going back to around 350,000, maybe 400,000 by next year. So we've got the demand side picking up again. On the supply side of the equation, well, we've had a record amount of detached house construction recently, driven really by the home builder stimulus that the previous government put in place. But now construction is starting to slow. We're seeing a lot of insolvencies in the sector. The cost of building a house is up about 30%. So we can expect to see the supply side of the equation slowing. So there's lots happening that is sort of positive for the rental market. There's just one factor that's pulling in the other direction, and that's interest rates, which is causing all of the caution at the moment.
Yeah, no, it's always interesting. So in that context then, Pete, you think that rising interest rates are going to have as much impact on softening property values as the hysterical headlines in the mainstream media would like to have us believe?
In a word, no. I think if you actually look at what's happening with mortgage stress, mortgage arrears, most borrowers are coping pretty comfortably with interest rate hikes. It's worth remembering that although the cash rate target went to zero for a short period of time, it was only there really through the COVID period as an exceptional circumstance. It's quite normal to have interest rates a bit higher than zero, of course. So look, to date, there hasn't been much in the way of actual stress. Households built up, $500 billion of savings through the COVID period. Most mortgages are ahead of schedule, about 70% or so. There will be some impact, no question, on the housing market. But I think some of the sort of the hysterical headlines about massive price declines, well, we're not really seeing that at the moment. In fact, to date, across the market, relatively modest downturn.
Yeah, no, agreed. So do you think there's a direct correlation between interest rates and property values, or are there other dynamic factors that collectively affect residential prices? And if so, what are some of these other key value drivers?
Well, every cycle is different. I think, all things being equal, higher interest rates will reduce demand in the housing market. But of course, the reason interest rates are going up is because demand in the economy has been so strong. So what that does reflect is we're starting to see incomes rising. So NAB's labour NAB's quarterly survey showed labour costs surging. So households are earning more. Cost of building, of course, is going up. The other thing that's really changing in the housing market, for the first time in a long time, we've got very tight rental markets. So rents are up at a double-digit pace as well. So there's not a direct correlation between interest rates and property prices. I guess the one thing that is unusual is that this will be the fastest tightening cycle since 1994. So in the short term, there's going to be a hit to confidence. But the terminal rate, or the highest rate that the cash rate target will likely reach in this cycle, will be about 3%. So it's still relatively low in historic and absolute terms.
Yeah, totally agree. And the average retail rates, if you look at it over the last 40 years or so, is been around the 5% mark. So we're really just getting back to normal in that context. Now, that's been great, Pete. Well, look, that really does put things in perspective. I now want to take a short break before we jump into where the property opportunities in the market are going to be. So stay with us for more here on Realty Talk.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Welcome back. Now, in continuing our great discussion with Pete Wargent from Buyers, now that we've got a better sense of what's really happening in property around the country, we'll now deep dive into Buyers Investor Report that's going to reveal where the opportunities are around the country and why. So, Pete, to kick things off there, what and where are the best places to buy property in today's market on a pretty much a state-by-state basis? And as you're going through them, I'd like you to sort of unpack what drivers are likely to influence each state and region in the short to medium term. So let's kick off with New South Wales, if we can.
Well, I think if you start from the top down, but for a range of reasons, property market demand is being pushed down from the premium end of the market towards the more affordable parts of the country. There's a range of reasons for that. It's partly lower borrowing capacity. It's largely driven by risk appetite. So the premium end of the market tends to be what they call pro-cyclical. So it does really well in booms, but less well when there's a downturn. There's also changes to tax legislation, tenancy laws, and so on. So if we start with New South Wales, well, from January 2023, there's going to be quite a big change in New South Wales in terms of stamp duty reform. We've been talking about this for years, of course, but finally it's coming into place for first-time buyers. So for first-time buyers up to $1.5 million, they'll be able to opt to not pay stamp duty going forward. So that's going to bring a lot of demand into that part of the market, sub $1.5 million. So if you look at some of the locations that will drive demand towards, well, houses in Newcastle, Central Coast, Wollongong, not so much for houses in Sydney, because $1.5 million, of course, in most of the parts of Sydney these days, you're talking about units. So look, it depends really on your budget, but there's certainly parts of the Hunter Valley, Central Coast, Newcastle and Lake Macquarie that are well worth a look, and also down towards the Shoalhaven and Illawarra.
Yeah, spot on. So there's still a pretty strong drive in the near regions around Sydney that are, I guess, following on from that exodus to lifestyle and the infrastructure and technology support that's going around that. But let's now sort of shift south to Victoria. And Victoria, again, has copped a bit of a flogging in the press of recent times, given drops in values or perceived drops in values even before interest rates were starting to rise. What's your read on where the opportunities are going to be in Victoria?
Yeah, it's interesting. If you look at the 10 years between censuses, Melbourne was by far and away the fastest growing city in Australia. It's just for the past 2 years, we've had very little immigration into Australia, and interstate migration has been away from Victoria, so particularly to southeast Queensland. So There's been an unusual dynamic for a couple of years that's had an impact on the housing market in some parts of the market. And again, I think the demand is being pushed, particularly for houses, just into some of those more affordable areas. So a lot of people would be looking at parts of West Melbourne, and lots of demand still in the more affordable suburbs of Mornington, as you well know, and likewise Geelong. But typically in Melbourne, the best results over the past 10 or 15 years have been for houses, much more so than for units. I think some counter-cyclical buyers are looking at particularly 3-bedroom units in parts of Melbourne. But similar to New South Wales, really, the demand has been pushed down a notch into some of those more affordable suburbs, like sort of the Werribes, Hoppers Crossing and Frankston and so on.
Yeah, any of the sort of regional areas in and around Victoria that are likely to be opportunities as well, Pete?
Yeah, and just as you mentioned, as for New South Wales, look, it's a very similar dynamic. I think in the era where people don't have to work in the CBD all of the time, then some of those, what they call peri-urban locations like Ballarat and Bendigo, lots of demand for housing there. And of course, sort of median house prices around the 700,000 level in some of those key suburbs, much more affordable than, say, for example, in inner Melbourne. So likewise, Geelong and Mornington's been heaps of demand over the past couple of years.
Yeah, absolutely. Let's now sort of complete our run down the eastern states and jump into the Sunshine State. What's your read on where the opportunities might be in that location?
Yeah, so as we mentioned, Southeast Queensland has seen the fastest population growth in the country over the past couple of years. A lot of people moving up, particularly from Victoria, also from New South Wales. A lot of people in the tech sector who don't need to be in the office all of the time. So I would look, if I was looking in Brisbane today, I'd probably be focusing on some of those north side suburbs, but ideally some of the more affordable ones like Zilmere, for example, where you've still got a median house price in the 700,000s. If you're looking a bit further afield, I guess the other popular places in Southeast Queensland would be Sunshine Coast. So places like Nambour, for example, still relatively quite affordable, certainly when you compare to the sort of Noosas and Parisian beaches of the world, but also Ipswich and Gold Coast, other places where you can still get in for sort of a median house price at around $700,000, which is a lot more affordable than if you go into Brisbane's inner suburbs or up to the Sunshine Coast.
Yeah, no, good call. Now, good old South Australia, where I've spent a lot of my time over the years, has been a bit of a contrarian in what's been happening in property in recent times, at least. What's your read on what's happening there and where the opportunities will be in the good old Croweat estate?
Well, you probably have a very good handle on it yourself, Bushy, being almost a local these days. But look, a lot of the demand in Adelaide has been driven by relative affordability. We've even had some clients who are from South Australia now moving back to Adelaide. So that's a dynamic we haven't really seen much over the past decade. Been a slow and steady performer. But the suburbs that are getting the biggest amount of attention in Adelaide seem to be those coastal suburbs. So close to the beach, reasonably close to the city, sort of 10 to 20k radius. And compared to Melbourne or Sydney, very affordable median house prices around the mid 600s. So it's not just locals buying there, though. We've got a lot of interstate demand as well. And the rental market in Adelaide, well, it's probably one of the tightest we've ever seen for a capital city, right up there with Hobart from a couple of years ago. So you can see why that's attracting the interest of investors as well as owner-occupiers.
Yeah, totally. Now, you mentioned the Apple Isle. It's had a halcyon run in recent years. What's your read in what's happening in Tasmania and where the hot opportunities are there?
Well, the Tasmania has had a spectacular run for the housing market. Unlike in many other parts of the country, there wasn't a big surge in building of units and apartments in Hobart. So despite the boom in demand, there was never the overbuilding that we got in other parts of the country. And the market has just kept going on and on. I think realistically, the best time to buy in Hobart has passed. But if you're looking in Tasmania, you might look to some of the other towns and cities around the country, which again is still relatively affordable as compared to the mainland. Just got to be a little bit careful about the price you pay, particularly if you're looking at Hobart.
Yeah, totally agree. Some of the northwestern coast, west of Launceston, there's still really good coastal communities with all the services, and the price points are considerably lower. So opportunities there. Now, the good old Western Australia's had a bit of a mixed run, particularly over the last 10 years, but there's some pretty green shoots that have been coming up there in recent times. What are you seeing in WA, and where are the locations there that are showing the greatest opportunity?
Yeah, I don't think you need to reinvent the wheel too much when you're investing in Western Australia. It's now actually the most affordable capital city in the country in Western Australia. Incomes are relatively strong in WA, and housing prices since the peak of the previous boom around 2012-13 have really not done that much. So I guess, look, you're just basically sticking to the fundamentals of property investing when you're looking at Perth, depending on your budget. Landlocked suburbs around the median price, houses with potential to add value. Rental market's pretty tight. Lots of parts of the economy. It's not the same as the mining boom years. There's not the big boom in resources construction these days, but overall the economy's coming out of COVID pretty well. So plenty of opportunities there for people of the contrarian or counter-cyclical nature.
Yeah, I think the WA has learned its lessons from the resources downturn, and they really are diversifying the industry base. And there's some really affordable locations in that sort of Rockingham down to Bunbury location where, you're getting really good quality 4-bedroom homes for, shy of $500,000. So there's and really good rental yield. So there's definitely some opportunities in that neck of the woods if you're taking a long-term view. Just to round it out, any thoughts on the territory? It's a very small area with a very low population, so it can sort of react in different ways. And any thoughts on the territory?
Yeah, as a former resident of Darwin, I absolutely love the city. I think it's one of my favourite places that I've ever lived, not just in Australia, anywhere in the world. I think, as you said, it's a relatively much thinner market, particularly for investors. There was a huge boom during the mining boom years, and then since then, it's experienced the other side of that coin. So, look, again, like a lot of the demand is really for properties with a good land to asset ratio, where you're not just buying the high rise units, but it's a patchier economy, really. It's less diversified in the territory, lots of public sector work and some mining. So look, for investors, if you've got the risk tolerance, it might be worth a look, but generally speaking, most investors are looking elsewhere at the moment. Yeah,
it certainly doesn't have the growth drivers, and like you, I spent about over a decade in the territory spread between Darwin and Alice Springs back in the late 80s and the 90s. It's some good cash flow yield opportunities in that neck of the woods, but doesn't have the sort of sustainable growth that you might see because of that lack of critical mass. Now, Pete, I wouldn't mind just sort of flicking to the flip side now and looking at what and where are the danger zones and which suburbs you should avoid in each state and why.
Yeah, I think when it comes to danger zones, I mean, a lot of these are sort of issues that you would always sort of take note of, particularly things like off-the-plan purchases. I think, we do know that statistically buying off the plan is riskier than buying established property anyway. But at this stage in the cycle, we've got construction insolvencies now at the highest level we've seen in 6 or 7 years and rising. So I think you really need to do your research if you're thinking about buying off the plan. You tend to pay a premium anyway to buy brand new, but there's a lot of stuff happening in the sector that can create additional tiers of risk, even on top of what there already is. At the moment, I'd be a bit wary about flood zones, as you would be anyway, but just with the way things are going in terms of regularity of events and media reporting, I think areas that are susceptible to flooding, you want to be really careful about what you buy, because insurance premia are only really going up. And the other things we've kind of already sort of touched on, things like one industry towns, they can do well in a boom period, but you really want to buy in areas that are well diversified in terms of their economy. So you're not just relying on one driver for growth. So some of the smaller or one industry towns are obviously riskier areas as well. So look, no specifics there as such. It's more just being careful about where and what you buy and sticking to the fundamentals or the basics of good property investing.
Yeah, no, always very good timeless advice there, mate. And I really appreciate those insights, Pete. I want to now take another short break before we actually delve into a number of major state-based changes that a couple of you've touched on already that are likely to impact on property in the foreseeable future. So stay with us, mate, and keep watching because you're here on Realty Talk, your trusted voice for all things property.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
Welcome back. Now, Pete, you've given us a great rundown on what's really happening in property alongside clear indications on where the opportunities lie. But I'd like to take a few minutes now to dig deeper into some of the major upcoming state-based changes that may have a potentially significant impact on property movements in the medium term at least. Now, first one of those I want to dig into, which you've touched on already, is I'd be interested in a few more thoughts on what impact New South Wales stamp duty changes are going to have on the types and locations of property when that legislation comes into effect on the 1st of January next year. And I guess the flow on from that is, does this actually create a window of opportunity in some areas in New South Wales?
Yeah, so I guess what the legislation will do is it effectively reduces the deposit requirement for first home buyers. So it's only really for that cohort that the tax legislation takes effect. The irony is, of course, that investors in the market can see what's going to happen, and therefore it does create an opportunity which will get arbitraged away by investors. So the sector of the market that'll be impacted will be the sub $1.5 million bracket. But people tend to be quite mimetic. We do what everyone else is doing. What we'll likely see, there'll be a big surge in first home buyers in 2023, especially once people can see that interest rates aren't going to keep rising. I think they'll generally come into the market, then people will start tapping the bank of mum and dad. They won't need as much money to get into the market because they won't be paying the stamp duty. So there'll be a big surge in activity for units in Sydney and houses in some of those sort of peri-urban locations around Sydney in that sub 1.5 bracket. So I think a lot of investors will look to get into that sector of the market, almost front running the opportunity. So this is the irony of announcing these changes in legislation in advance, of course.
Yeah, totally agree. I did some calculations recently. Just by removing that stamp duty hurdle, it's effectively going to increase the purchase price capacity for buyers in that sector by about 30%. So that's a fairly major jump, which, at a time when things have been getting tight, will be revelational to some of those sort of surrounding regional hubs in and around Newcastle, the Hunter Valley, and others that you spoke about previously. So
well, I'm glad your calculator agrees with mine, Bushy, because I was very much a back of the envelope calculation, but I was thinking, well, really, for a first home buyer, you'll only need about 2/3 of the amount that you needed previously. So that roughly tallies with your 30%. So it's good to sense check it. But of course, what that does mean, of course, is more activity and more purchasing capacity for the first home buyer.
Yeah, totally agree. Now, I want to shift states to Queensland now, Pete, because at a time when I think particularly Southeast Queensland was poised to capitalise on all the potential that it's been incrementally enjoying, the Queensland government now in its, I don't know whether it's a good or bad thing, but they're now looking to institute a change to the land tax legislation where what they're looking to do is effectively tax interstate investors from the 1st of July next year based on their entire Australian nationwide portfolio's land value. What effect do you think this is going to have on property demand and values in particular in Queensland, as you said?
Yes, it's quite a rapacious move for a state government to tax investors from interstate simply because they own an investment property in Queensland. And then, as you mentioned, it's going to be looking at the nationwide land value of the portfolio. So I don't think this has been well understood yet by people who own multiple investment properties. I think the first thing that will happen, I mean, we already have a rental squeeze in many parts of southeast Queensland. There's been a big surge of people moving up to that part of the country, driven by the ability to capitalise on flexible working arrangements or being in the office maybe 2 or 3 days a week instead of 5. A lot of people have chosen those lifestyle areas, Gold Coast, Sunshine Coast, Brisbane to some degree as well. But this is going to create some forced sellers. Some portfolio investors are just going to offload their Queensland property. As a result, I think we might see more interest maybe in townhouses and units as well to try and avoid the land tax. But I think the first impact is going to be on the rental market, which is already chronically tight. I think it's not really been thought through that well. I think one of the concerns for investors is whether other states and territories start getting similar ideas. At this stage, there's no sign of that. But the rental market's already too tight, and this is only going to accentuate that.
Yeah, totally agree. And I agree with you. I hope the other states don't take note of that, because I know that from the Queensland government's perspective, they're looking after their voters by not imposing that tax on the locals. But it's certainly a significant disincentive, particularly for property investors who have multiple properties around the country. It's certainly going to be deterrent. So, and I guess that's a good segue into the next question, because we've seen in recent times that Victoria and Queensland have made fairly significant changes to their residential tenancy legislation. WA is now looking to tighten theirs quite significantly. What impacts do you see this having on the local and unit markets in those areas?
Well, I think it's in some ways a similar potential impact. One of the interesting things in Australia is you have very few professional landlords, by which I mean sort of investors with large property portfolios. And two of the reasons, one of which we already mentioned, the land tax, makes it quite difficult for people to grow very large property portfolios. If you look at countries, well, like the United Kingdom, where I'm from, for example, you have far fewer mum and dad investors, but you do have professional landlords with huge portfolios in some cases. Australia doesn't really have much of that, partly because of land tax, but also if you're going to see tightening residential tenancy legislation as well, well, that's not going to encourage more professional landlords. So I think at the sort of macro level, it could lead to a tightening in the rental market. At the micro level, well, just increasing the tensions that sometimes exist, I guess, between landlords and tenants, most of whom are excellent.
Yeah, that's true. I think the sort of invisible influence here is that for existing landlords who have older properties who now have to spend a lot of money to get them up to code from various areas, there'll be landlords who offload those properties or just pretty much close the door and don't rent them, which was going to put further pressure on the rental squeeze. So it'll be interesting to see that pans out, mate. Look, mate, it's been a really great chat. You've been very generous with your time, as always, and very enlightening with some of your comments. But before we close off, where can listeners get a copy of your Buyers Full Investor Report?
Jump on the website, buyersbuyers.com.au. If you go to the reports section of the website, you can still get that report absolutely for free. You can download it there. So plenty of other free information and guides and other goodies there for you as well. But yeah, reports section of the website, buyersbuyers.com.au.
Yeah, fantastic. And for those interested in getting buyers to assist them with either their next property purchase, whether it be strategy, finance, property research, selection or negotiation, how do they go about it with buyers, and what's the best way for them to contact you, Pete?
Same way, go to the website, buyersbuyers.com.au. As I mentioned, there's plenty of freebies there. If you're interested in doing some market research or subscribe for our newsletter, but if you're looking for some guidance on next steps or where and what to buy, you can just contact us via the website. Always more than happy to help.
Fantastic, Pete. I really appreciate your time, mate, and look forward to staying in touch and looking for the next innovative insights that are going to come out of yourself and the Buyers team.
Always a pleasure. Thanks, Bushy.
Thanks, Pete. Well, as you can see, the reality of property is very different from the mainstream media rhetoric, and there's still a wealth of opportunities for smart property buyers who take advantage of the current window of opportunity to secure A-grade properties in A-grade locations before the fear-driven stampeding herd changes direction. Stay with us for more here on Realty Talk.
Property depreciation is the natural wear and tear of a building and its assets. Property investors can claim depreciation as a tax deduction each financial year. Depreciation is a non-cash deduction. This means you don't need to spend any money in order to claim it. On average, BMT tax depreciation fined residential investors almost $9,000 in first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Well, that's another wrap for this week's show. Another big thanks to Pete Wargent and the entire Buyers team for generously sharing their very invaluable intel. And before we go, make sure you don't miss another episode of your trusted voice for all things property by subscribing to Realty Talk now on Apple Podcasts, Google Podcasts, Spotify, YouTube, or wherever you listen. And make sure you jump on channels.realty.com.au/Realty Talk and click on the subscribe now button to get a free copy of my award-winning book, Get Invested. And while you're there, make sure that you check out one of Australia's most extensive range of properties for sale from over 7,000 agents nationally, where you'll even find properties that aren't listed anywhere else. Thanks again to realty.com.au and BMT Tax Depreciation for their ongoing support. I'm Bushy Martin from Know How Property Finance. Remember to always get invested, and I look forward to seeing you again next week.
Miss something in this week's show or want to catch up on past shows? Do it anytime at realty.com.au, where we connect buyers, sellers and agents differently.